Brothers and sisters, excellencies, between yourself and the lunch, we have an important session, and that is the launch of one of the most important report within the global Islamic banking and finance industry issued. The report is called Islamic Finance Development Indicator Report, that is being issued by Refinitiv or LSEG, London Stock Exchange Group, for a number of years now. To present some insights from the report, we have with us Brother Rada Al-Ansari, Head of Research at Refinitiv. He will share some insight from the report, and after the presentation of the report, we'll break for lunch, inshallah.
Bismillah ar-Rahman ar-Rahim. Your Excellencies, ladies and gentlemen, distinguished guests, Assalamu alaikum wa rahmatullahi wa barakatuh. First and foremost, I would like to thank AAOIFI for giving us this opportunity to launch our 10th IFDI report here today. And I would also like to thank our long-standing partners, ICD, for being with us since day one. And I would like to thank them for their continued support. So ladies and gentlemen, as we celebrate our 10th year anniversary, we have enhanced our IFDI model, and we have done 3 major changes to our model. First and foremost, we have incorporated fintech and sustainability into the mix, as we know their importance. Second, we have rearranged some of the matrices to come up with new indicators. And finally, we have changed the weightage of some of the pillars. So now financial performance constituted of 40%, used to be 20%. Governance, which is equally important, now has a weightage of 25% from 20%. And the remaining 35% has been equally distributed on sustainability, knowledge, and awareness. So ladies and gentlemen, our 2022 rankings, we have Malaysia that still performs quite well and ranks first, and that they have been maintaining this ranking since our first edition of the report. And second place is Saudi Arabia now, which has performed quite well on different indicators, including awareness, sustainability, and financials, followed by Indonesia, which has performed exceptionally well when it comes to knowledge. Bahrain and Kuwait have both performed quite well in awareness and governance. So ladies and gentlemen, we'll start with financial performance. So Islamic finance today stands at $4 trillion, which shows again the resilience of the industry when it comes to shocks and crises. The market has grown 17% in 2021, and we expect it to grow to 5.9 trillion in 5 years from now. In terms of asset classes, we can see that Islamic banking holds 70% of the market, followed by Sukuk 18%, and followed by Islamic funds, OFIs, and Takaful. Islamic banking, which is the largest asset class, we have been seeing exciting trends there. One of the trends we have seen that a lot of banks are returning to profitability. The second trend is the expansion of Islamic banking in non-traditional markets. We have seen countries such as Tajikistan growing by 84%. We have seen Burkina Faso growing by 27%, Ethiopia by 26%. So as you can see, we expect the market to continue growing to reach over $4 trillion by 2026. Sukuk, which is an asset class that has been growing consistently in the past 5 years. Sukuk has performed both in traditional markets and non-traditional markets. In traditional markets, we see that Malaysia continues to be the leading market when it comes to Sukuk. We're seeing a lot of Sukuk issuances also out of Saudi Arabia. They have been quite active since 2017. And of course, we have Indonesia as well, that has been a country that has been issuing regular retail and green sukuk in the past few years. Islamic funds, obviously, as investments, appetite grow across different jurisdictions. And especially when it comes to green investments, ESG investments, we're seeing a lot of funds being launched dedicated to green and ESG investments. We expect the market to continue growing. It had a substantial growth in 2021, growing by 34%, and we expect it to continue its substantial growth to reach $416 billion. As for markets, Iran, Saudi, and Malaysia, they continue to be leading the investments. Other Islamic financial institutions, obviously, as the name indicates, these are companies that provide financing beyond Islamic banks. And we have included Islamic fintech into the mix now. The market has, in terms of assets, about $170 billion, and it's expected to grow to $214 billion. Again, Malaysia, Iran, and Saudi Arabia are leading markets for OFIs. The smallest asset class, takaful, currently stands at $73 billion. It has grown by 17% in line with the overall Islamic finance. And we expect the market to continue growing to reach $106 billion. Again, the same leading markets, Iran, Malaysia, and Saudi Arabia, are dominating the takaful sector. So ladies and gentlemen, we have finalized the financial performance side. We will move now to the ecosystem, and we start with governance. Governance obviously covers regulation, covers Sharia scholars, covers disclosures, and the independent board of directors. And in terms of countries that are adopting Islamic finance regulation, we can see that a lot of countries are focusing on fintech, Islamic banking, Sharia governance, specific accounting and auditing, and takaful, as well as sukuk. So we see a lot of adoption in different jurisdictions in both traditional and non-traditional markets. Knowledge, which is the backbone of Islamic finance when it comes to talent and research. We see that of course, it's covered by education providers and degree providers in addition to paper produce and journals. And as you can see, and as I mentioned, Indonesia leads substantially, and we cannot expect anything less from Indonesia being one of, or the largest Muslim population country. Awareness, which is measured through seminars, events, virtual events, as well as news. Obviously, the pandemic has pushed a lot of jurisdictions to move to virtual events. As you can see, over 800 events were held virtually, followed by seminars as well as conferences. The leading markets are Saudi Arabia, Malaysia, Pakistan, Indonesia, and UAE for seminars. Same countries are appearing for Islamic finance conferences in addition to Turkey and UAE. Sustainability, which is one of the enhanced indicators, and we measure sustainability through ESG funds, ESG sukuk, sustainability guidelines, reporting for both ESG and CSR, as well as CSR dispersed. And we can see clearly that ESG sukuk are continue to grow. Currently, Saudi Arabia, and as I mentioned, Indonesia, they're leading the market. Malaysia, which is also quite active on the corporate side, we see a lot of smaller corporate issuances in Malaysia. And to conclude, ladies and gentlemen, we do have a lot of data, as you can see. And for you to be able to access the raw data, we're providing all the raw data in our main platform, Icon. and all the raw data are there for download. So ladies and gentlemen, to download the report, please visit our Refinitiv website as well as our Zawi website, or please pass by our stand for your free copy. And I would like to thank you now, and I would like to invite our partner ICD to give a few words. Thank you.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحبه أجمعين. السلام عليكم ورحمة الله وبركاته. Just I would like to say a few words regarding this report issued by Refinitiv, and the ICD was very well involved in the financing and the support for this report issuance, and therefore I would like to say this report is another way of showing how Islamic finance is growing and where we are last time and where we are now, and what is the area that need to be emphasized, and we have to look forward in order to galvanize the industry and put it in the right place. And as you have seen from the report, there are so many areas that still need to be taken into consideration, and the growth should be worked out in order to put the Islamic finance industry in the right way. And ICD, as one of the main financier and supportive of the financial sector in Islamic finance industry, especially the private sector, is very happy to work with everyone in the work of Islamic finance, whether it is government, what they call grant support, or financing, or anything that will help in the growth of the industry in the future. And I would like finally to thank you all for that one, and thank one again Refinitiv for their hard work, and the ICD is happy to work in that direction with them in the future in order to make the resilience of the Islamic finance industry one of the best and one of the one to follow by all industry. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much. Again, and the second report that was launched at the annual Islamic Banking and Finance Conference here. The report is available outside on the stand, and also it is available to download as an electronic copy. So with that, we thank you very much, Refinitiv, for launching it at the AAOIFI-IsDB Islamic Banking and Finance Conference. With that, ladies and gentlemen, we do break for lunch. And the lunch is being served again in the same hall, on the left-hand side of this hall, like yesterday. And we do expect to come back, if we can request everyone to be back in the room by 10 to 3, please. So we can start our last session, which is focused on fintech and its role within the Islamic banking and finance industry. So can I request everyone to be back by 10 to 3, please? Thank you very much.